Hey everybody, Smart Silver Stacker here. Welcome to another live stream. Hope you're doing well. Today we're going to do something a little bit different. As you can see, I have got the chart of silver pulled up here, and what we're going to do today is we're actually going to use an AI tool to perform some analysis on this. This is a tool called ChartEye. It's a free tool to plug in for your browser, and it lets you analyze the chart of any financial instrument. So it's going to be coming at it from the technical analysis standpoint, something that I think is, important. I like to typically focus on the fundamentals for silver and gold. A lot of fundamental reasons to stack them, to get into them, but I think the technicals can give us a little insight as well. So do me a favor, give me a 1 in the chat if you can hear me loud and clear. Let's get the AI, the algorithm, YouTube's AI, fired up to get this video out there. And then we're going to actually do this in real time. So I don't know what this AI tool is going to say about this chart. I've played around with it a little bit, but kind of seems like each time it gives you a little bit of a different take. But let's go ahead and do it. We'll do this and I'll read it with you in real time. So now this chart is being analyzed by this AI. And I will read through this with you, and we'll see what it has to say about the chart of silver. Now, by the way, I used, going back to about 2011, that's the chart that I have selected just to kind of give us a good situation. It seems like if you zoom it out too far, it gives you kind of like a broad overview. So I think this time frame is good. It encompasses the previous peak, all of the recent action. Now, let's see what it has to say. So, current technical trend, according to this AI. And by the way, we're going to do gold too, so stick around because I think both charts can give us some insight. And this tool is really neat. I mean, I think it could be a useful tool for doing due diligence. Also, I just want to point out this chart, this software is going to give us some trading recommendations. It's important to note this is just for educational purposes. I mean, this is just an AI, so I don't even know what it's going to say yet, but don't go out there and assume that this is some kind of advice. This is just a free browser plugin, what it's telling us. So, take it with a grain of salt. It says, analyzing the chart, we see that silver has been trading within a range after a volatile drop and subsequent recovery. Okay, that sounds correct. The price has been fluctuating between approximately $22 and $26 for the past few years. Check. Pretty good analysis so far, at least at reading the chart. Currently, the price is near the upper boundary of this range at $24.70. Now, regarding the support and resistance levels, it says the significant support level is marked by the lows at around $22. Okay. On the upside, the resistance is evident near $26, and that's the level that we just touched yesterday, where it does appear that there was some resistance. Now, I had drawn a trend line on the chart in some previous live streams and videos, and it actually breached that level yesterday on the trend line I had drawn, but it hasn't gone above $26. We haven't gone a close in silver above $26 yet. It says that this is where the past price action has shown a tendency for the price to turn downwards. Now, again, educational purposes only, as this points out trading strategies that this AI would recommend based on the current chart of silver. Considering the current position near the range's resistance, there are two main strategies traders could consider. I also want to point out, I don't do a lot of trading when it comes to silver. I typically just stack, get the physical stuff. By the way, before we read these trading strategies, if you want to get some physical silver, make sure you check out today's video sponsor, SD Bullion. Right now, they have got an exclusive launch with the Royal Mint, these Una and the Lion silver bars and gold bars. They have any quantity pricing on those right now. Really beautiful bars and a pretty good value too. You can only get those at SD Bullion, so make sure you check them out there in the deals section. Now, let's see what it says to do regarding silver here, the AI. It says a range-bound strategy. Traders might look to enter a short position with a target near the range of support around $22, placing a stop loss slightly above the resistance level around $26.50. So what they're saying there is if silver does fall, it probably won't fall much lower than $22. That would be your target. And if we get a close above $26, you'd probably want to abandon that short. That makes sense. Conversely, should the price retreat toward the range support, a long position could be considered with a take profit near the resistance level around $26 and a stop loss just below the support. So trading strategies, taking advantage of the range-bound nature of silver there. Now, here's an interesting one, a breakout strategy. If the price breaks above the resistance level and closes convincingly beyond $26, this could signal a bullish breakout, and traders might enter a long position targeting further upside. A stop-loss order could then be placed below the breakout level around $25.50, just to kind of mitigate risk there, I suppose. However, traders should wait for a confirmed breakout since false breakouts are not uncommon. So, kind of a mixed bag there as far as what it takes away from this. It points out the obvious that silver is trading within a range that's been going on for some time. However, I think the scenario that we should be looking for here based on the fundamentals is that breakout. So should you see a close in the silver price above $26, well, that could very well mean off to the races rather. Could silver consolidate a bit more before that occurs? Absolutely. I mean, nobody's got a crystal ball. While it is doing that, I'll continue to look at pullbacks like the one we had today as a buying opportunity because, again, the fundamentals for this stuff ultimately are tremendous. The amount of money being printed, the amount of debt being created, the amount of deficit spending that ultimately will have to be financed via the Federal Reserve is huge. But we're just looking at the technicals today. Now, why don't we take a look at gold and see what this same AI has to say about the gold price. Now, I've done the same thing, selected the same time frame just prior to 2011 to encompass the previous bull market and all the action that we've seen since then. Let's take a look. This is, again, doing this in real time, so I don't know what this is going to say. Here we go. It's titling this, Chart Analysis, Bullish or Bearish. The provided chart is a weekly time frame depiction of gold CFDs on TVC. The chart shows an overall uptrend with the most recent candles indicating a bullish momentum, as we can see an apparent rise in prices over the last few periods. Here's a breakdown of the technical analysis. It's pretty interesting that this AI can do all of this from a snapshot, right? Let me know what you think about this in the comments, but I like the idea of an AI chart analyzer because it seems to, at least to some extent, remove some of the biases that a human might have when looking at these charts, right? AI ostensibly doesn't have an agenda. Of course, it could, depending on the data that it's trained on. Of course, we have to think about that as well. But at least with an AI, there is the potential for a less biased analysis than probably with any human, because, all humans are biased. I would say myself, I'm probably biased towards the precious metals. I think many in the stacking community are. Not that that's wrong necessarily, but this gives us sort of a Spock-like logical analysis, taking all the emotion out of it. Let's see what it says here. It says the sequence of higher highs and higher lows suggests a bullish trend. Well, yeah, gold is in a bull market, no question about that. It just hit new all-time record highs in the past day, trading over 2,200. I think it got as high as 2,220, and I suspect that we will be taking those highs out in short order. And, the fact that gold is breaking out also, the AI probably won't pick up on this as the two, historically are sort of correlated, but it is an indication, I think, that a silver breakout is up ahead. And, once that happens, silver tends to move faster than gold once a breakout really occurs like that. Once you get the movement in silver, that's how bull markets in gold and silver have played out over the years. I don't think there's any reason to think that this time will be any different. Now, it says the trading strategy for gold here that it is recommending or, hypothetically proposing, let's say, it's not financial advice, it's just educational content. And of course, I wouldn't make any financial decisions based on what a AI tells you, but let's see what it says here. Given the bullish context, a simple strategy would be to look for pullbacks as potential entry points. Okay, that seems smart. Here's a hypothetical strategy. Entry. A retracement towards the 2100 to 2120 level could be used as a potential entry zone. Utilize a candlestick pattern such as a bullish engulfing or hammer as confirmation. Below the most recent swing low, which seems to be around the 2070 level, you could do a stop loss to protect the trade against a reversal. So just in case that breakout doesn't work out the way we might expect it to, you can implement a stop loss. And again, I don't do a lot of trading. This is more for the traders out there. Put a 3 in the chat if you ever do any trading or short-term trading of the precious metals. Because here's the thing, if you do that, it really is a completely different thing from stacking. Because stacking, physical metals are not really good vehicles for trading. Sure, you can buy them and you can sell them for a profit or whatever, but that's not really what they're for. They're more like insurance against a sovereign debt crisis or a currency crisis. But if you're trading, you're probably doing things more like in the miners and the ETFs, more liquid instruments. So it really is a different thing, but I think there's room for both, especially if you follow these markets closely. And finally, they say a take-profit strategy here. One could target previous resistance or psychological levels, such as 2150 or higher, depending on risk, appetite, market conditions. So that's where they're saying you could take your profit if you do get in following a retracement. I personally would say if you see a pullback to 2100 and then you sell at 2150, you're probably missing out on some potential gains there, but that's just me. It says, keep in mind trading involves risks, and this strategy should be tested with proper risk management. Now, let's see. I see Stuart Pike in the chat there saying day trader, but don't trade metals. That's probably smart. The metals, there is manipulation there. I don't think that manipulation is the only thing driving prices, but it's certainly a factor. You've got JP Morgan traders, convicted of trading, of spoofing the gold and silver market. So you really do have to have a big pair to get in there and be trading in the short term with metals. But silver, silver can have some benefits for traders as well, in the sense that it's a highly volatile metal. So if you do get it right, there are some big moves there to take advantage of. Why don't we do one last thing before we wrap this up, since we've analyzed those charts? Who would like to see silver or gold analyzed on a shorter time frame? Because I think that could be interesting. Why don't we do that with silver? Go ahead and do me a favor also, smash that like button if you haven't done it yet. Consider subscribing to the channel if you haven't done that. Why don't we zoom into, let's say, 2018 or so to give us a real short-term silver chart here, and let's go ahead and see what the AI has to say about that. Again, I'm not really sure what it's going to say. This thing is in real time as we all are, and let's see what we got here. Says, in the provided chart, we can observe the price movements of silver contracts depicted in a weekly time frame from a trading platform. The analysis will be a technical overview based on the visible price patterns, trends, and historical price levels. Bullish or bearish sentiment. And again, this is the short-term silver chart, going back to about 2018 or so going about 6 years. Shorter term than the last one, kind of an intermediate term chart, I guess you might say. The price action is characterized by a series of volatile swings. Yeah, silver is a very volatile metal, creating both higher highs and lower lows over the observed period. This indicates a lack of clear long-term trend. However, the most recent price action suggests an attempt to move upward. Without additional indicators or a more narrowed time frame, definitive conclusions about the trend direction can't be drawn solely on the basis of this weekly chart. Why don't we go back and change this to a daily chart and see if that helps this thing out? Yeah, let's do maybe the same kind of time frame, but we'll just give it a little more data here with a daily chart. And, put a 3 in the chat if you find this to be interesting at all. This is different than what we've done in previous videos. I just came across this tool and thought it would be an interesting thing to take a look at with all of you. But, put a 3 if you think this is interesting content, if you'd like to see more stuff like this, or if you consider this to be a bit of an odd break from the norm, you can put a 4, I guess. Give me your opinion on this AI technical analysis. Okay, so we gave it the daily chart, and it says now, technical analysis summary for silver. The provided chart is a daily time frame. Please note the following observations. Overall trend. The chart displays a range-bound scenario with no clear long-term trend. Okay. It is range-bound. We know that. There are periods of high volatility as evidenced by the large price swings. Yep. Support and resistance zones. We can observe resistance in the region of approximately $29, where price has peaked and reversed multiple times. Yeah, those were the highs. Those were like the silver squeeze highs, right? Remember the silver squeeze? I still think we might get a silver squeeze. It could happen overnight. The precious metals markets, they're not very transparent in terms of how much physical metal there is backing up all the paper. You see stories like JP Morgan having a nickel warehouse that was really just full of boxes or bags of rocks. And so, you got to understand, nobody really knows with this paper silver how much of this stuff is backed up by physical metal. That's why I like to stack. That's why I like to get assets with the lack of counterparty risk. That's why, I do like the miners because they own a bunch of the physical metal in the ground. But stuff like the SLV ETF, maybe stick to PSLV, like the Sprott ETF. They probably at least have the metal in a vault somewhere, but you got to wonder about this stuff. Anyway, on a tangent there, let's see. A consistent support zone is not easily identifiable due to the choppiness of the market, but a loose support area could be approximated near $22 from past interactions. So if we do get a pullback from here, I would actually be really shocked to see silver fall below $22. Could it drop a bit more from here? Yeah, sure. We could see both metals fall as gold goes back to that $2,100 level, retest that. But I would be shocked if we saw silver drop below $22, in the short term here. The most recent price movement shows a sharp pullback from highs near $27. All right, so possible trading strategy based on this. Actually, let's read this last paragraph. The market being range-bound makes it hard to declare a bullish or bearish stance definitively. However, given the recent rejection at highs, one could argue for a short-term bearish outlook until a clear support level is established. So there you go. You could get a little bit of a pullback in the short term. Definitely would be a good time, especially if premiums remain low and retail investors remain uninterested. Could be a good time to do some stacking. Possible trading strategy. Given the current market structure, a range trading strategy may be appropriate. So this is similar to the recommendations from the last analysis, basically saying you could short silver near the top of the range, buy it near the bottom. They're around $22 or so. Anyway, this is, again, just hypothetical. Now, we could do one more chart, I guess. We can zoom in on the gold market and let's do this on the daily, just like we just did silver. And we'll see if we can get any more insight into gold based on its shorter term chart. Again, we'll go back to, say, 2018 or so, just to have enough data for it to play with. And I would encourage all of you to go out and check this thing out, ChartEye, an interesting tool. And this stuff's just going to get better, this AI. And, if you're an early adopter of it, you could turn it to your advantage. And this goes for anything, not just gold and silver, but these tools are interesting. But let's see. Okay, so we got the short-term gold chart here, intermediate-term gold chart. What does the AI say about that? The provided chart is a daily time frame representation of CFDs on gold as traded on the TradingView platform. To analyze its trend, we can assess various technical aspects such as price action and historical support and resistance levels, trend identification. We can observe a recent uptrend characterized by higher highs and higher lows. Specifically, the price has made a significant move upward from around 1850 to current levels above 2100, suggesting a bullish sentiment in the market during this period. Previous resistance around the 2050 level appears to have been breached and could potentially act as support in the event of a pullback. On the upside, the market may encounter resistance at the most recent high near 2180. Now, I think we're at 2180 right now, so we'll see. Maybe we'll drop a little bit from there. And again, if it retests 2100, that actually would be bullish. That would be a bullish thing. It'd be a good time to get in, according to this, mind you, not financial advice. Trading strategy here, entry. A pullback entry strategy could be employed where a trader waits for the price to retest the support near 2050 before entering a long position. They say to use a stop loss, take profit around 2180. Well, that's where it is right now. So it looks like the AI wants to wait for a pullback in gold. But anyway, the takeaway here, I think, from this analysis, to summarize it, would be that there's a strong bull case for gold. The chart looks very bullish. We're seeing higher highs and higher lows. So gold is really off to the races. Silver, the AI seems a lot more ambivalent on. It doesn't seem to want to say, silver's moving one way or the other. But one interesting thing was that it did say if we get a break above 26, that could be a breakout. And if you just go back to the 22 high, you can kind of draw this trend line here, and you see that's kind of what we're bouncing off of right now. But if we do get a close above 26, it would be a breakout. And I suspect that sooner rather than later, just my take, that that's what we're going to see based on the fundamentals, based on the fact that inflation is continuing to run rampant. You've got the world on the verge of global conflict. You have got global de-dollarization. You got central banks buying lots of gold. Eventually what's going to happen here is, the price of gold taking off, it's going to make gold too expensive. I mean, sure, you can go out and buy a gold back or whatever for $4 or soon to be $5, $6, but for you want to buy some real serious heavy duty bullion, a 1 ounce coin at $2,200, that's out of a lot of people's price range. And as people continue to suffer from inflation, I think that you're going to then see them walking into coin stores. They want something to protect themselves. They're going to say, oh, a gold coin is $2,200. Well, what else do you have? And like, well, there's silver. You can get one of those for $25. People are going to become very interested in that as the price of gold continues to move higher. But currently, right now, I mean, nobody is taking notice of gold's breakout. You hear it mentioned hardly at all in the legacy media. You hear all this talk about Bitcoin, all this talk about AI, tech stocks, that sort of thing. But soon, there's going to become, it's going to become impossible to ignore what's happening with the precious metals and with the debasement of the dollar. And, I think cryptocurrency, Bitcoin, sure, there's a use case for it. I own a little. I view it kind of like a lottery ticket because it is so volatile. But it's not a substitute as a store of value for gold and silver. And right now, a lot of people are distracted by that. But eventually, they're going to get the memo about, real store of value being gold and silver. And when that happens, well, those of us who buy at current levels, I think, will be rewarded. Just my take. Let me know what you think in the comments down below. Thanks for watching, everybody. This was fun doing this with the AI. Maybe we'll do this again soon if we get some updates on this chart, or maybe we'll look at some other charts. But leave me a comment down below to let me know what you think about this. Smash the like button, share the video. Don't forget to subscribe to the channel, and I will catch you next time.